Hello everyone, welcome back to the channel, your number one source for income-oriented investing. It's time to go over the high yield covered call ETF landscape on the Canadian market. If this is the first time joining us for this monthly series episode, welcome. This will cover the high yield ETF covered call ETF landscape on the Canadian market, but there's going to be another episode, separate episode, if you're American, for the US market. All right, so if you're not interested, you don't want to invest on the Canadian stock market, stay tuned for the next episode, which is going to cover the covered call ETF landscape on the American market. Another reminder, everyone, is that there's so many covered call ETFs now in Canada and the US that I can't cover all of them. So the focus of this episode or the monthly series really focuses more on the diversified or index-based ETFs. And we're going to start with what I feel is my favorite format, right? Covered calls and 25% leverage. So we're going to start with the lightly leveraged ETFs, and then we're going to do the non-leverage as well. But again, really going to focus on the more diversified ones. But I'll give you my take on if there's any sectors in the stock market that I feel are undervalued right now. Turns out this month there finally is. So before we do that, let's take a look at what the stock markets have done in the past 30 days. So it's been a very, very good month. I'm filming this in mid-August, by the way. So the overall Canadian stock market, which I feel the TSX-60 index is a good indicator, is up significantly in the last 30 days. It was a really good 30 days. Same thing for the S&P 500, even a little bit better, and even better for the NASDAQ 100, which is a little bit more technology focused, and even really good for Bitcoin as well, hitting all-time highs. Same thing for gold, by the way. We passed 120,000 for Bitcoin. Absolutely incredible. So before we continue, I'd like to thank the sponsor of today's video, a good friend of the channel, Harvest ETFs. And in case you didn't know, they have a global utilities income ETF. This is a covered call ETF, HUTL, which has been doing really, really well lately. And by the way, they also have a leveraged version, HUTE, as well. You guys know I personally would always choose the leverage version if I had a choice, which has a really, really nice yields, and the performance has been really, really good as well. So this is a very unique utilities covered call ETF because, well, first of all, we know that utilities is more of a defensive sector, but also this has global exposure. So it's not just Canadian or North American, it actually has global exposure. So if you scroll down and you actually look at the portfolio here, you'll see that from the geographic allocation, you have, telecom and oil and gas, electricity, all over the world, not just North America. And it turns out that that combination is really, really good for the performance. You see that here. It's had a really good performance in the last year. So I'd like to thank Harvest once again for being a good friend of the channel. And by the way, in case you didn't know, Harvest is going to be the headline sponsor in the Blossom event, which is coming up in Toronto, Montreal, etc., many locations. Make sure you get your tickets. And guess what, everyone? In case you didn't know, I will be at the Toronto and Montreal event. So come and meet me in person. Come and meet the team at Harvest as well in Toronto. You can meet Michael Kovacs. They're all going to be there. It's going to be awesome. Use the promo code Adriano15. I repeat, Adriano15 for 15% off for the Toronto and Montreal tickets. I'll put the link in the video description below, right at the top there, in case you want to attend and come meet me and Harvest, and a bunch of other fund managers as well are going to be there. All right, so moving on. And by the way, I did this for fun. I actually was looking at the utilities, some popular utilities covered call ETFs, and I was doing some total return comparisons, and you see that the Harvest ones are indeed doing really, really well, as you could see from the numbers here. So there's many utility covered call ETFs to choose from in Canada, but as you could see, the 1 year, the 5 year, even versus the very big, very popular ZWU from BMO ETF, the Harvest one is outperforming. So let's go over the landscape now, everyone. We're going to start with, of course, the diversified leveraged ETFs first. So of course we have the high income shares from Harvest ETFs, and this one, it's really HHIS. That's the diversified all-in-one, right? Because it has 15 stocks. It has the all 15 US single stock covered calls ETFs in it. Very, very popular. It's growing. I just did a 30-minute Q&A with Michael Kovacs about HHIS and also about HHIC, which is launching soon in August. Everyone, they're launching Canadian versions, or Canadian stock versions, if you will, single stock covered call ETFs with 25% leverage. So you have all the stocks here as well. You have 10 of them, so there's Shopify and Royal Bank TD, etc., etc. And just like HHIS, there's going to be an all-in-one in case you don't want to pick and choose. You want all of them equal weight. You're going to have HHIC, right? So instead of HHIS, HHIC is kind of going to be like the all-in-one, which is going to include the 10 already. So pretty cool. As far as any changes, any distribution changes on HHIS, it's still 25 cents a month. So there's no changes there. Moving on, there's other all-in-one diversified ETFs that are covered call and 25% leverage from Harvest ETFs. They have HDIF. This is their Harvest Diversified Monthly Income ETF, which has a combination of a bunch of Harvest covered call ETFs, including that utilities one. By the way, the yield is a little over 10% and the yield has not changed. No changes for this one. If you absolutely want a 60-40 split, personally, I'm not a fan of fixed income, but if you want that classic 60% stocks, 40% fixed income, there's also HBIE, which has that split, also covered call and 25% leverage. But if you prefer the 100% equity, like me, there's HDIF, there's HHIS. So moving on to Hamilton ETFs now. Of course, you have the beloved HYLD, which is kind of like an S&P 500 hedged to the Canadian dollar. This one has raised their distribution, like I had predicted, from 14.5 cents to 14.7 cents. So obviously, it's been doing really well. It wasn't really genius or rocket science to figure out that a distribution increase is coming, because SMAX and QMAX, the ETFs, the main two ETFs inside of it, even FMAX, by the way, have steadily grown their ETFs, steadily grown their distributions in the last couple of months. So of course, if HYLD includes them, well, there's a chance HYLD is going to also increase as well. HDIV, the OG covered call all-in-one with 25% leverage. I believe this is actually the first one that came out. Is absolutely doing phenomenal. Still doing phenomenal. And this one also has increased their distribution a little bit from 17.2 cents to 17.3 cents. And Hamilton have launched the first 3 0DTE or daily covered call ETFs in Canada. You have CDAY, which focuses on Canadian dividend stocks and writes those 0DTE calls on the S&P 500, right, on VU. Right here, well, it doesn't do it on VU, but it holds VU to do it. Growing very rapidly here at 18 million already. Not even a month it's out. It's only going to be a month tomorrow. Actually, I'm filming this on August the 13th. Semi-monthly distributions as well. So you get 2 distributions instead of 1, which some people like. And this goes for all their day max ETFs. So there's CDAY, which focuses on Canadian dividend stocks. There's SDAY, which focuses on US dividend stocks, quality US dividend stocks, and writes the covered calls also on the S&P 500. And then there's one that focuses more on technology. So this is the technology day max. The yield is a little bit higher. Still semi-monthly distributions. By the way, the yield started at 18%, 18%, and 20%. In case you haven't seen the video, I do a full Q&A with the chief options strategist, Nick Picard, at Hamilton ETFs. So make sure to check it out. If you're interested in these ETFs, we do a deep dive. So QDAY, which focuses more on technology, they have, instead of VU, they have QQQM, which is a NASDAQ 100. And this is looking like the most popular one with already 33 million in assets under management. Absolutely incredible. So there's your lineup from Hamilton ETFs. Of course, they have a bunch of more ETFs, but of course, right now we're focusing on the more diversified all-in-one and leveraged as well. Moving on to Global X Canada, the kings of the indexes, right? They have USCL, they have for the S&P 500, QQCL for the NASDAQ 100, EQCL, which is the equivalent or the covered call equivalent of XEQT or VEQT, etc. So some news that USCL did reduce their distribution a little bit for some reason by a penny to 24.5 cents. I'm not sure exactly why. My guess is that volatility has been really low. The VIX has been really low lately. So we'll see what happens next month. But either way, it's 20. It actually used to be 23 cents for all of 2024. Then they raised it to 25.5. Then for 1 month, it went to 23.5, back to 25.5, and now 24.5. So I'm not sure if they're going to keep it at 24.5, maybe re-raise it at 25, I'm not sure. But either way, everyone, remember that these distributions can vary, and remember that the amount of the distribution does not actually impact the total return of the fund, right? We all, of course, you're the smartest audience, and you know that this 24.5 cents or 25.5 cents, it's basically coming out of the net asset value every month on X dividend date, right? Or think of it like it's coming out of the stock price. So if 1 penny less is coming out of the stock price, well, that means, the stock price is going to be 1 penny more. So obviously you understand what I'm saying, right? The amount of income that's coming out does not actually impact the performance. It impacts your yield, yes, your income, but not the performance. But either way, very small, minute. And I think for the S&P 500, it should be 12 to 13.5% yield range. Anything above that is a little bit higher, right? Just like HYLD is about 13, USCL now with the new distribution rate is about 13. So we'll see what happens. Nasdaq 100 though, they kept it at 29.5. So at one point it was reduced 2 cents also in April here, but now it's still at 29.5. So no changes there from last month. EQCL, if you really want all stocks global, you want the whole world. Personally, you know that I'm not a fan of that. I'd rather focus on the US stock market, but the majority of this is in the US stock market anyway. No distribution change here, still at 22 cents. Moving on, you have Brompton, you have the we're going to Brompton now. You have Brompton's all-in-one BMAX, which is doing really, really well. A little over 10% yield in here. And so in here, there is a little bit of fixed income. So I would definitely consider this one if you absolutely want a little bit of fixed income, if you want less volatility, right? They do have some preferred shares with this ETF, and they also have the split core preferred share ETF. So there's about 23% fixed income in here, but it's doing really, really well. This is a really good performing ETF, and I would probably recommend it if you want maybe a little bit less volatility than 100% stock. Same thing goes with really HBIE, right? So, and also I gotta add this one to the list because it's doing absolutely phenomenal. The CLSA Brompton Split Corp Class A Share ETF. So this is an all-in-one for split fund Class A shares, which obviously have more growth and return and are a lot more exciting than the preferred shares. So this one has been doing really, really well. This is a perfect ETF if you like split funds, but you don't want to pick and choose. And also if you don't want to deal with the missing dividend problems, right? So I did do a Q&A with Chris from Brompton where we go over this ETF. So they're actually holding a little bit of those dividends back. So in case there's a crash and a couple of these split funds stop paying, the ETF will keep paying or should keep paying and have you covered. So this is a great solution if you like split funds. You could, but if you're scared of missing distributions or anything like that, you could always transition to this ETF. A really genius ETF in my opinion. Last but not least, this is actually not an ETF, everyone, but it's so good that we have to talk about it all the time. The Canoe EIT Income Fund. So this is pretty much set up like a split fund. It has 20% leverage, not 25, and it doesn't really do covered calls. It doesn't do covered calls. This is more of a growth fund, but it's been absolutely phenomenal in terms of returns. The only issue is now that the yield is really, really low because there seems like they're going to keep the distribution rate at 10 cents a month. They're not going to raise it. Maybe they will, but it's done so well, at $15, 42 NAV, which means it's actually still trading at a discount. I don't know why this one always trades at a discount. It's worth $15.42, but you could buy it for $15.16 as of whatever this date price is, the August 12th. But unfortunately, the yield is a little bit low here, just under 8%. Not bad though, but it's been absolutely great in terms of performance. And this one covers the Canadian market and the US market as well, which I like. You see the breakdown here. So it's mostly Canada, 53, but a big chunk in United States, a little bit of international as well. So the equivalent to this one kind of reminds me a little bit of HDIV. That's the one I would do the equivalent to just because of the geography split there. But yeah, it's still doing really well. So that's it for the leverage ones, which I feel are, my opinion, the best ones. If you're gonna buy and hold forever, you might as well get a little bit of leverage with interest rates being pretty low in Canada. But let's move on to the non-leveraged ones now. All right, everyone, in terms of non-leverage, and then we're going to look at Bitcoin as well, some split funds, and then I'll tell you which sector I think is undervalued this month. So there's ZWQT. So we know that BMO is still the biggest asset manager in terms of covered calls in Canada. They have their all-in-one, but they have a bunch of other funds. ZWQT is one to consider if you just want an all-in-one. The distribution rate is pretty low. It's under 6%, unfortunately. But if you ask me, I personally like ZWG a little bit better. Global dividend stocks with cover calls. The yields, I believe, a little bit higher, and the performance has been higher. But you could check them out on their website. Look at all the BMO ones. But in terms of all-in-one, they have a bunch, right? ZWC focuses on Canada, and they mostly go after dividend stocks, not really indexes. ZWQT is their all-in-one. They did recently come out with a new physical gold covered call spread ETF. I'm going to have a video on that soon. I'm going to be talking to the fund manager. It's their first covered call ETF that uses a spread strategy. It's ZWGD, by the way. So we're going to look at that ETF, but this is basically a great way for income investors to get a little bit of yield while being invested in physical gold and not giving up too much upside. So stay tuned for that video. Moving on, you have the Evolve index-based, pure index-based ones, ESPX, which focuses on the S&P 500, ETSX, which focuses on the S&P 500 of Canada, the TSX60. Both are doing really, really, really well. Evolve continues to impress with really nice high yields as well. So check them out. They have also hedged the CAD and unhedged versions for the S&P 500. So ESPX would actually, rather ESPX.B would be kind of equivalent to the unleveraged version of USCL, which is USCC. So, if you're interested in indexes, cover calls, but you absolutely don't want the leverage, these are two to consider. Of course, you have JEPI and JEPQ, very, very popular in the US. They're now in Canada as well with the same exact stock symbols. It's going to have similar distribution rate. So, there you go. So, volatility has fallen. The VIX has fallen. This is why the distribution is a little bit less. And this is my assumption on why USCL reduced their distribution a tiny, tiny bit. So, the yield with JEPI is typically between 7 and 9% or something like that. JEPQ, which focuses more on the NASDAQ, is a little bit higher. But let's check out the latest distribution here. Also fell as well in August, which is probably because of the volatility that fell. Fidelity has FEPI, obviously trying to compete with JEPI. So this is a rinse and repeat S&P 500 cover call ETF. They're basically doing 2% out of the money strikes every month. So you're pretty much giving up, you're only giving up past 2% upside every single month. So if you like a rinse and repeat, you like the S&P 500, this could be one to consider. Personally, I would just go with the, with a USCL, for example. Invesco, the guys who actually manage the NASDAQ 100 index, have a NASDAQ 100 covered call ETF in Canada, QQCI. No leverage, about 10% yield, I believe, something like that. This one is pretty much comparable to QQCC from Global X, but the Global X one is beating it in terms of performance. We also have PDIV, which is from Purpose ETF. So this one has some Canada, some US. Very high yield. They're still having that 12% yield, which is surprising. They haven't reduced the distribution. This one's a bit funky because it does call options and also puts as well. But it really focuses on, last I checked, the US. But hey, there's 45% in Canada. So another one that's maybe comparable to HDIV without the leverage, like a North American type of ETF. And by the way, Purpose also, just like Harvest, has their own single stock cover call ETFs with 25% leverage. The major difference is that the distributions are typically lower and they're hedged to the Canadian dollar, whereas the Harvest ones are not. And they have a bunch of them, including kind of a tech all-in-one, with the Magnificent Seven and Broadcom, YMAG, in case you're interested. But they also released news that they are just like Harvest. And there's even another company called 9Point that are launching Canadian stocks, single Canadian stock covered call ETFs. But Purpose is launching a lot of the same names as Harvest, but even more. So they're launching more banks. So BMO, Scotiabank, CIBC, National Bank, Enbridge, Shopify, just like Harvest, Canadian Natural, TELUS, like Harvest. But they're also launching Dollarama, Couche-Tard, the Railway, Canadian Natural, Manulife, Brookfield. So a little bit more stocks, a little bit more names than Harvest, but no all-in-one as far as I could see, unfortunately. And I think they're pretty much going to be leveraged, I believe, as well. We'll see what happens. So moving on to Bitcoin now. Of course, you have HBIX, which is basically just IBIT with covered calls and 25% leverage. You have BCCL, which is the exact same thing. The main difference is that BCCL offers semi-monthly distributions. Management fees a little bit higher on BCCL, however. And if you don't want leverage, you have BCCC, right? Global X Bitcoin covered call ETF. And of course, there's the OG BTCY from Purpose, but this one has a much higher management fee for the same thing as BCCC, right? 1.1 instead of 65 basis points. So I'm not sure why you would keep this one unless you absolutely love Purpose and their strategy. That's completely fine, but you could get the equivalent now for a much lower management fee. So that's Bitcoin. If you just want the Bitcoin with covered calls and some leverage for some of these, then you have HBTE from Harvest, which I really like. This is in my personal portfolio as well, which focuses on Bitcoin companies. So you have, Coinbase in here and Strategy, some miners like Galaxy and Riot. You have a little bit of Bitcoin itself in here as well, with covered calls as well. So these are all great Bitcoin options. Of course, there's also MicroStrategy or Strategy, right? There's MSTY, MSTE from Harvest as well, and a bunch of the American ones as well to consider. Moving on to split funds now. So guys, a lot of them are trading big discounts here, right? Especially the Brompton ones. Brompton ones are my favorite split funds. You see the NAVs versus the stock price. So a lot of them are trading at discounts right now. Even the middle field ones, right? E-split, especially ENS, the Enbridge one, is trading at a massive discount. You see that it's worth $16.62. Even the RS is at a discount. This one's at a discount. And don't forget, guys, to make your life easy, you could always get the Brompton all-in-one, which includes most of these as well. So that's it for the overall view of the covered call landscape and split fund landscape, I guess, in Canada. In terms of undervalued sector, it's really the healthcare sector, guys, that's taking a beating. And in terms of healthcare covered call ETFs, we have HHL, which is the biggest by far. It's Harvest's biggest covered call ETF. It's their specialty as well, healthcare sector. So you have this one. I would always prefer the leverage one, and they do have a leverage one, HHLE, which is actually just under 13.5% yield. Very, very high yield for such a defensive sector that's gotten beaten down lately because of politics. Harvest is not the only one. There's Life from Evolve. There's LMAX. Even BMO has one. CI has one. There's so many healthcare covered call ETFs. My favorite format, however, the only one with covered calls and the leverage is HHLE, however. So this could be one to consider if you are looking to invest in an undervalued sector with the markets being at an all-time high now. So thanks for watching, everyone. Give me a thumbs up if you're interested in getting a coaching session with me. I've been getting a lot of emails, a lot of requests that they're always sold out. Go in the links in the video description below. Go on our website to look at the details. But yes, they do sell out quickly. August and September are sold out. September is a smaller month because I'm traveling to Toronto and Montreal, so there's less time. But October sessions are gonna open up. So make sure you're a PII Inner Circle member and a Plus member to get the discount and to get priority for the booking when the October ones come out. So all of that is on our website. Watch that video, one-on-one coaching session info to get all the information. Make sure to also go in the video description to check out all our affiliate links, right? To get on Blossom, and I have discount links for Questrade and Passive and all that. So make sure you check everything out in the video description below. So we're going to do this again next month, everyone, to keep you updated on the overall covered call ETF landscape. Again, I can't cover everything. There's just so many covered call ETFs on the Canadian market, a lot of sector specific ones, but these are really the overall index based ones, the ones I feel really that'll make good core positions in your portfolio. But of course, you look at the providers that we talked about, Harvest and Hamilton and BMO, because they'll Purpose, Global X, a lot of them have sector based covered call ETFs as well. So take care, everyone. See you soon.